Hello and welcome to the latest episode of the Wealth Management Invest podcast. I'm your host, David Bodamer, with the wealthmanagement.com editorial team. This episode, I'm happy to bring on Robert Collins, who is the co-head of Private Wealth and head of Partners Group's New York office. Robert, welcome to the podcast.
Thanks, David. Great to be here.
So I'm very excited to get a chance to talk to you about evergreen fund structures, and just some of the, like the stuff that you guys are known about. Before we kind of get into some of the guts of that, I just wanted to give you a chance to maybe talk a little bit more about your position, the company, anything you wanted to say, just as like a way to ground people in your place in the market.
Sure. Partners Group is approaching 30 years old. We're a global private markets firm, large platform, about 1,800 people, 20-something offices around the world, true global presence. Private markets is our focus. We started in private equity. We've built adjacent businesses within private infrastructure, private credit, private real estate. More recently, we announced our fifth business line, which is royalties, a few months ago. So a large platform, I think, germane to this discussion, David. We've been recognized as innovators in the space in private markets, and you can look at that from a number of different dimensions. In terms of how we run the company, we're the first private equity firm to go public in 2006. We have been innovators in terms of, really more importantly, how we work for our clients. So we developed the first purpose-built solution for advisors or individual investors. I'm sure we'll talk about that. That's the evergreen business. We were first to do other things, adjacent areas, defined contribution, for example. So I'm sure we'll get into all of that. But I'm, as you said, global co-head of our private wealth business. That's represents about a third of our AUM, about 50 billion, over 150 billion assets under management. It's a business that's about 20 years old. So we've been at this for a long time. Terrific business to serve individual investors, smaller institutional investors in markets around the world. As you highlighted, I'm focused on the U.S. So I'm PM, president, board member of our U.S. Evergreen Fund Complex. So great to be here.
Yeah. So I guess one of the reasons I'm interested in speaking with you is that you do have this interesting perspective, because like there's a lot of talk. There's a lot of buzz right now. I mean, there's a lot of folks that are just getting into looking at bringing private markets to the wealth channel. There's a lot of new products coming to the market, but you guys have really been here for a while. And I think I think it's been over 15 years with the flagship fund in the U.S. without getting into too many specifics on that. But so I guess kind of curious, just given that, okay, you were an earlier movie here, you've got some success. What do you make of like the experience you've had, but also suddenly seeing like a lot of other folks now like really looking at this as a potential place or a market that's been underserved for access to these kind of investment opportunities?
You're right. We've been at this for a long time. Before I would joke, before it was cool, we were doing it. I always like to start, David, with why it's an important topic and why I assume people are interested in learning more about it. And it's pretty straightforward. The starting point is this continued shift of the economy from public markets to private markets. And I'm sure the listeners have become conversant with these trends already. But really simply, if you look at the number of public companies, it's declined by half in the last 20 or so years. And that's a US phenomenon. That's also a phenomenon you see in other developed markets around the world. If you look just at the US, my favorite statistic is 87% of 100 million revenue companies and above are private and not public. So this is why it's important. It's important because I think we all agree that it's been beneficial for our society to have developed this ownership society in the last 30, 40, 50 years, thinking about the advent of mutual funds, which fostered that real ownership. So that's a good thing, I would argue. I think most would agree with that. But then the problem becomes what happens when the economy again moves from public to private, and individuals no longer have that simple, easy way to get exposure to these terrific companies. And there's even more to it, David, in terms of if you look at the types of companies that are in public markets compared to private markets now. And there's some real profound changes. So our mission has been for decades really trying to solve that dilemma. And these evergreen funds are just a terrific way to do that. As with almost everything at Partners Group, the reason why we were early was simply because we were listening to problems that our clients were facing, and they were looking for solutions. That's where everything starts, with us listening to clients, solving problems. I know it sounds like a cliche, it typically is, but it's really at the heart of who we are, how we operate. And that's why we started our U.S. wealth business over 15 years ago, was to solve that challenge. And the challenge was financial advisors were struggling with the packaging, the status quo back then, the packaging of private markets, private equity, which was in the drawdown fund, the coming
Right.
fund. It just wasn't getting the job done. So we were asked to solve that. We again love to be challenged with something like that, and that's why we did it. We also did it, importantly, because we had conviction that we could. So we had conviction in terms of our capabilities as investors, capabilities as portfolio managers, and then risk managers to really deliver an appropriate solution. So I would just, to answer your question, how we feel about it is we feel terrific about it. We feel it's terrific that there's now an entire category of solutions that is enabling more and more parts of the market to have access to the economy in a way that they weren't able to do before.
So in terms of the evergreen structures, I know there's slightly different flavors, like what's done in Europe, what some of the things that are done in the US, but in general, some of the things that I often hear as the benefits are things like the lower minimums, the simplified tax structure, the fact that there's no capital calls, like you can just be the ability to experience returns without it being necessarily a J curve, because you might be getting access to more mature things. And can you just is that accurate in terms of just thinking about why some of these products have gotten the appeal, and why that's maybe better than a drawdown structure for at least some investors?
Yes. And David, I think we should be fast friends, because I don't think you had at the top of the list liquidity. And I mentioned that because you've been saying evergreen rather than semi-liquid. When I think of this category of funds, and it is to many synonymous, evergreen, semi-liquid,
Right.
democratized, I strongly prefer evergreen, and I prefer the attributes that you highlighted. So what to me is most important with these funds is that you're enabling that access. You're enabling people to get invested. And if the evergreen fund manager is doing its job, keeping you invested, enabling you to compound. So I say, and anyone who's heard me talk about this topic, I say it's Buffett, Munger, Einstein 101, compounding, right? The most powerful force in the universe. That is what evergreen is about. And in a way, it's that bridge, public and private. We're taking the best practice of public equities, compounding, time in the market, and simply doing that now with private companies instead of public companies. So that's the most important aspect of these funds. You're not committing capital, waiting for your capital calls, and then being told or given your distributions and not having any of that control. These evergreen funds, you have control, you have precision in managing this part of your portfolio that you never had before. And this also explains why you've seen increased, and I would argue you'll continue to see this as a trend in the next 5 years, increased adoption of the structure by institutional investors, because everyone's facing the same challenge. It's not the denominator issue of having, too much in private markets. It's quite the opposite. Everyone's struggling to get invested, stay invested. So to me, that's what's really powerful about these solutions, David, is getting the exposure, having that consistent exposure through time. That's what evergreen is, and it's really, again, incumbent upon the manager to have the requisite capabilities to do that, because our responsibility is to keep them invested, and that means through different parts of the cycle, through time. And that's why I mentioned earlier, you not only need to have the right investment capabilities, but portfolio management, portfolio construction. That's critically important to managing these programs. So that's how I think about your question, David.
And well, you did mention the liquidity thing, just like, which is often, I guess, a hang up for people, like getting over the idea that, they maybe are too, like, these structures do offer some liquidity. It's but that I think I take your point being that, like, that's not, like, the whole idea here is you're getting access to private, and you should be enjoying the illiquidity premium. There's liquidity as a mechanism for, as needed, but it's not, they shouldn't be viewed as like liquid things.
For as long as I can remember, we've told investors, look, you need to have a long-term mindset. These are long-term investments. You should apply that same mentality that you may have for the commitment you used to make to a drawdown capital call fund, a truly illiquid limited partnership. You should apply that same time horizon to these evergreen funds. They should be long-term in nature. The difference is you do have a mechanism here, right? So that you have a way to achieve some liquidity, but we just really encourage people to think long term to really capture that long term total equity return. And it's all of the other features that we've heard from clients, again, over 15 plus years, that they value, right? It's that ability, again, as frequently as a monthly basis, to get invested and to make that decision, how much and when you want to invest, right? Which doesn't sound terribly profound, right? If you're coming from the public equity perspective, okay, that's obvious, but that's incredibly powerful in private markets. So you can decide when you want to invest, and then all of those other pain points, I think, go well above liquidity on that list of attributes. So tax reporting, 1099 instead of a K1, performance reporting that is not IRRs, but similar to what you would see in your traditional mutual fund type reporting. Those are the benefits that and the attributes that people really value. And so what we've done is, really prove that you can provide that accessibility. You can take away some of those pain points, and most importantly, I can't believe I haven't said it yet, but most importantly, provide the same, if not better, investment outcome. Right. So that's really at the heart of it all. And so one of our newer catchphrases is TML. Time, money, liability. So this is what we hear from advisors, they only have so much time. They only have so much money to build out teams, to manage things like capital calls and distributions and K1s, and explaining to clients about the J curve, and don't worry about it, everything's going to be fine. There's only so much time to do all of that. It doesn't have to be that way anymore. like now you can really, again, with a great deal of elegance and simplicity, have this effective evergreen solution that will really be the core of one's portfolio. That's the other trend, David, just core satellite. As much as I maybe make some critical comments about capital call funds, they have a role, right? Don't get me wrong. In the future environment, you're seeing it already as core satellite. You'll have a core of evergreen funds, and you'll still make commitments to those more niche focused capital call vehicles as your satellites around the core.
So another thing I wanted to ask you about was in about 3 months ago, I think, you announced a partners group, and BlackRock announced a partnership to build a multi-private markets model portfolio. Could you talk about that, just like what the news there was, and any rough sense of timeline?
To put that into context, we have the way I look at the market. We have the evergreen funds. We have ours. We have plenty of our peers out there, as you've highlighted. And that's terrific, right? To have that choice in the marketplace, that's a great thing for advisors and investors. Then what we've done over the years is really try to provide solutions leveraging our capabilities in managing private markets in these evergreen structures. Try to provide those capabilities in other areas that are in need of that solution. So think defined contribution, think parts of the insurance market, and then over time, the other thing that we've noticed is a bit of a developing. I've been calling it paradox of choice. And it's not quite as bad as, going into Sherwin-Williams and trying to pick out, one shade of green out of, 1,000 options. But there is a challenge now in the growth of the evergreen marketplace that there's a lot of choice. And
Right.
it's hard to filter through a number of different dimensions. For example, just the product structure heterogeneity. We've been talking about evergreen funds, but there are different types of private equity evergreen structures.
Mm-hmm.
There are different types of credit evergreen structures. There are different types of real estate ones. There's a lot of choice out there, and we've noticed that it's difficult to cut through that from the advisor perspective. You look at this shelf of solutions, and it's hard to really figure out where do I source from. Okay, do I take something from public equity? Is it fixed income? How do I do that? What's the right mix? How do I think about manager risk? So what we've developed with BlackRock is a solution that we really believe will have a fundamental positive impact on the marketplace, because it provides a simple solution. You can have, one push button subdoc and then get immediately invested in a diversified portfolio of evergreen funds that will be rebalanced. And that's really, really important. So rebalanced over time, so that, an investor can, really, really simply get that exposure and have confidence that it will be rebalanced appropriately over time. And we'll deliver that in different flavors, different risk profiles, basically conservative, moderate, aggressive. So just like that experience you've seen in, traditional model portfolios. So we were really excited about that announcement. We're even more excited now, given the feedback we've had since we announced the solution. And we will be in market next year, hopefully earlier in the year, first half of the year. So that's coming to a theater near you, as they say. And also there's been a lot of other announcements in the marketplace, other model solutions. I think that's terrific, right? We're really pleased with what we've done. The combination of BlackRock and Partners Group is just incredibly powerful, leveraging our expertise in private markets for a couple of decades with their incredible business in models, utilizing Aladdin and the incredible capabilities they have, and then our common focus on building solutions for the client that really work. So we're really excited about that. But next year is when we'll be officially in market.
Yeah, it seems like a really cool idea. I don't know, just like, and if you think about, like you were saying, model portfolios, there's all sorts of data that shows how popular that is as a delivery vehicle, and client satisfaction. Advisors like to use them, and it just feels like a really elegant way to get some access here, which and not have to just pick one or two things, but actually get some access to different some different asset types. And I think, yeah, like you mentioned, that you're going to do some different risk profiles. So I don't know, like from my seat, it was a really interesting announcement, and to compared to like what just seeing the evolution of the market in general is really interesting. But in general, getting hit with a lot of launches of individual funds, and the SEC, the pipeline of things that are working their way through the approval, there's just so many of these coming through. But this really caught my eye just because of some of the things that you talked about, but just the way that it kind of does resonate with some of the broader market trends.
Yeah, it's a total private markets solution that is scalable, thoughtfully constructed. It has that right mix of scale and personalization because of the ability to pick your own mix, frankly. And then it's two leaders in the space, so we're really excited about it. I always think of these these solutions. What forgive the cliche, but what would I want? And when we were launching our flagship evergreen fund 17 years ago. That was my perspective there. It's like, what would I want as an owner of this solution? And that's what we've done here. So we really think it addresses an enormous need in the marketplace. And it's so the future, I think you'll see massive adoption of that. And I have conviction in saying that, just again based upon what we hear from the market, what the sentiments you just expressed. And you'll still have investors that will select their own portfolios, build it themselves, and you'll still have core satellite, all of the above. But I think this model solution will be really, really powerful.
So one other question is just taking advantage of your insight, as a company that's done this not just in the US but globally, are there lessons that or insights that's given you in terms of looking at how this has been applied in the US versus other markets? Are there ways that things that then have been used, or structures that are slightly differently, are helping inform this whole process and this whole adoption of alts? Or are there certain places where things are ahead or behind? I don't know, just kind of getting like that macro, just like giving your seat, what kind of, as a real global player here, what can you see that maybe somebody who is only focused on the US wouldn't necessarily notice, for just to kind of put it that way?
Yeah, great question. I don't know if I've ever been really asked that before, but it's a great question. I mean, what comes to mind, David, is yes, there are many different jurisdictions, different markets, regions, countries around the world. Our approach has been to develop specific solutions for those specific markets. So we tend to have more funds, more structures than fewer, because we want to have the right solution for Europe, for example, which may be different than a US 40 Act fund. So we tend to cater to those specific needs. And then there are, of course, significant differences in terms of the operating environment. How the workflows are in the US compared to Europe or Asia. I mean, there's some pretty stark differences. And then in terms of where the action is, where the innovation is, it just depends. And so I'm just thinking, as you asked that question about the digital topic. We did our first tokenization of a fund. I believe it was the first tokenization of a private equity fund ever. We did that a number of years ago in Singapore. We have an enormous presence in Singapore. The government there, the regulators really were fostering an environment of innovation. So that, being global does have its advantages where you can, develop solutions, innovative solutions in one market and eventually, bring them to other markets. That's a bit of an aspiration I would have for here in the States. And there's a ton of work, of course, that the industry here in the US is doing in terms of taking advantage of the distributed ledger technology, not just to tokenize things, but almost more importantly, eliminate risk and cost in different parts of the workflow. But global. That's what it means to us. It's related to our focus on serving the specific needs of clients around the world, and then I do think about how we are able to to leverage the work that our colleagues are doing all over the world for different markets. But it's a good thing for us and our clients to be global.
Taking a good chunk of your time here, so I appreciate you answering my questions so thoughtfully. Just one last, before we wrap up, though, just wanted to give you a chance. If there's anything, any final thoughts you want to leave the audience with, or anything you wanted to underscore, just wanted to give you a chance to kind of put in a last word.
Well, that's awfully kind of you, David. Thank you. Look, we're really excited about private markets, serving individual investors, institutional investors. We love the evergreen solution. We've been, delighted to see it be embraced by our peers, by individual investors, platforms, institutions, and we're really hopeful that we'll continue to see that adoption. Just getting back to the big picture, providing that content. So we're excited about the defined contribution market, given some of the changes with pooled employer plans. Maybe we'll save that for another time. We could dive there, but that's going to be a huge topic in the next couple of years. So that's what we're excited about. Models, defined contribution. It's just really terrific to provide these options, these solutions to investors. We just think it's really important work. So thank you, David. Thanks for your time today.
Yeah, thank you, and definitely look forward to continuing to cover what you guys are doing. So, thanks for your time, and we'll be staying tuned.
Thank you,
David. How can people get in touch with you if they have some questions?
You can reach me on LinkedIn. Also, contact information is available on wealthmanagement.com. And all of our coverage on alternatives and these kind of strategies you can find in the investment section on wealthmanagement.com.
Okay, great. Well, thank you all for listening today. Please like, follow, and share this podcast with your friends. Until next time, I'm Wendy McConnell.